Of growth, because Lee, I want to get your take on what's happening there. Treasury yields are inching higher. We're focused on jobs data, of course. The ADP report yesterday reporting a decline of 301,000 private sector jobs last month. That was the worst report since April 2020. We had the JOLTS report showing 10.9 million job openings in December, the third highest ever. And we are waiting in the next hour to get the jobless claims this morning and the January jobs report tomorrow morning, which is going to apparently show 150,000 jobs added to the economy last month, with the unemployment rate at 3.9%. But there are others who say we're going to see a decline. Goldman Sachs says we'll see a drop of 250,000 jobs tomorrow. PNC is out with a report saying we'll see a drop of 400,000 jobs. But Lee, look, let's not forget what the Atlanta Federal Reserve said yesterday. They're predicting growth of 0.1% for the first quarter. So your thoughts on the macro story and how that plays into your investing ideas?
So it means two things for me. When you see the ADP report off 500,000 versus estimates, that's not a little miss, and you can blame Omicron all you want, but nobody was estimating in Omicron. So number one, I think the job reports information we're going to get, I think we're going to see big misses. You're not going to see this idea that we're going to raise 50 basis points next month. I didn't really follow that narrative. I think that was a bit too hawkish, so I think that's off the table. But what are the implications for my portfolios? Does this mean that the Fed is going to not raise or not do something? And the implication is that the value stocks, the cyclicals that have just been killing the NASDAQ all year and where all the money flows are going into, right? Is that off the table? I say it's not at all. I think you can still buy the cyclicals, and I wouldn't worry about this, because at the end of the day, this concept that the Fed was really going to raise 0.5 point next month, I think is really just for a lot of people who are buying this tech stuff that's overpriced into the future of more hikes, the future of seeing something a little bit more like we saw 22 years ago with .com. I mean, just look at the Facebook chart versus Cisco in 2000, and you start to get real concerned about buying the dip here. So I think that if you see any weakness over the next couple weeks, because value is done, because this job reports, I think you shrug it off and buy.
Well, that's an interesting way to look at it, I'll tell you, because, look, we've got an economy here where investors are looking for growth, and